What's happening, y'all? Welcome to Sunday Swing Trade Setup. Just like every week, I'm gonna give y'all some swing trade plays, go over the market, all of that. Happy Mother's Day if any of y'all mothers out there are watching this. So since it's Mother's Day, I ain't gonna carry this out too long. I got like two plays. I wasn't able to do like crazy research, but I made sure I at least you know what I'm saying, took 2 hours out of the week to see if I could find some plays for the next coming week. Let's go over the plays that I called last week. Let's look at them. Look like Delta was one of them. Delta Airline. Let me press play on this thing. So we got Delta Airline. Look like a bull flag or double.
To be honest, but we're gonna show y'all the to me on the 4 is one of the weaker ones. Shoulder,
Kava.
shoulder, head. Right?
So we got Delta and Kava.
Is a good bottom is gonna go. But
Nvidia.
outside of it, outside of the double bottom, I also like how if you go to the hourly time frame, you can see that. So to be honest, I
Uber.
think I only got Uber on here for a continuation. It's nothing on Uber that Bucks. We got this inverse head and shoulders.
Starbucks. I
I
had
don't know
a
if y'all
couple plays
remember when
last
I
week.
told y'all about the inverse head and shoulders earlier, but we got inverse head and shoulders consolidation. Usually, all right, this is a bull flag.
All right. All right. So hold on. Let me check it up. All right. So last week we had Delta, Kava, Nvidia, Uber, and Starbucks. Let's pull it up, man. Let's see what happened. So with Delta. All right, let me share my screen. Remember, whenever I'm reviewing the play, we going 5 days back, right? So we going 5 days back. As y'all can see, 1, 2, 3, 4, 5. So 5 day, 1, 2, 3, 4, 5. So we were here. If you would have did the swing trade play, you would have been up. The next day we was up, and really the whole week we was up. Friday we was down a little bit. So it looked like Delta was a go for the swing trade. Let's look at Kava. Let's count 5 days back. 1, 2, 3, 4, 5. Kava was not a go. Kava would have been a bad swing trade play. So we got Delta, yes. Kava, no. Let's look at Starbucks. Starbucks was definitely a no. Starbucks canceled. Let's look at the next one. Nvidia. Hold on. Nvidia, if we count what 5 days back, 1, 2, 3, 4, 5. 1, 2, 3. So Nvidia wasn't really a good swing trade play. If you would have held it, you know what I'm saying, for the whole week, you would have made money. But usually when I'm calling plays to, you know what I'm saying, either be in profit the same day or the next day. So I'm not counting Nvidia or Uber, but Delta looked like it was a go for last week. So last week we had 1 out of 5 calls. Now I don't mean that's the only one that would have been profitable, but that's the only one that I consider. You know what I'm saying? I be trying to call sniper plays that we expect to start and profit the next day. All right, y'all know how we do, man. Fear and greed index. All right, so on the fear and greed index, the market is greedy. The market has been fearful and is becoming more greedy, which give me the vibe that we are in an upward trend. But let me verify to make sure. Yep. So as you can see, if we go over to the chart to VTI, the total stock market is in an uptrend, right? We going up, right? If not every candle, every other candle, or every other candle is heading in the upward direction. So for swing trades, we got momentum on our side, but you don't want to just trade momentum or anything like that. You do want to make sure that you got some nice plays. You want to make sure that the company is financially stable. Which the two companies that I'm gonna show are both financially stable, so we don't really got to go into the finances. I'm gonna go over the first one. We got Tesla. All right, so we got Tesla for my first swing trade. Let me pull it up. All right, so I like Tesla because we got this bull flag, right? We got this bull flag, but we also moved above the 200-day moving average, right? The 200-day moving average is this purple line that's coming across here, right? And when we're above the 200-day moving average, it's usually considered bullish. Now, usually it's late to the trend. As you can see, way back here is when we started to come down. It didn't come below the 200-day moving average until down here. So it's usually late to the trend. So the uptrend probably really started down here, but it's not confirmed by the 200-day moving average until here. So I like Tesla because it's above the 200-day moving average. We got the MACD. This right here is green, showing me that the stock should continue in the upward direction. And it's also a bull flag. So let me show y'all the bull flag pattern. If you've seen any of my previous videos, you know what the bull flag look like. If you've been trading for a while, you know what the bull flag look like. But look all the way over to the right. When I'm talking about a bull flag, it's this pattern all the way to the right where it's extending upward, it consolidates, and now it's probably after consolidation gonna do a breakout with a continuation to continue going up. So to see a demonstration, right? This is a bull flag. It's a flagpole, a consolidation, and then a breakout. So the bull flag is not confirmed until the bull flag is breaking out of that flag consolidation. So go back to the chart for Tesla. We go to the chart for Tesla. You can see that, we got a flag, upward momentum, consolidation, and it looked like it's going to break out. We're on above the 200-day moving average, and the MACD is green. I like Tesla for a solid swing trade play for next week. But there's another one I like even better. But also doesn't require as much capital as Tesla does. All right, so let me make sure y'all can see this. So Tesla was my first play for the week. If you ain't got Tesla swing trade money, then I like Coca-Cola. So the reasons why I like Coca-Cola, we on a daily time frame. The reason why I like Coca-Cola is because first I looked at this this level right here. I wanted to see if this level was significant, right? And then we go back all the way over here in March. We bounced off of the same level. This dot that I put on the chart right here, this dotted line, I wanted to see if the level was significant. I can't really count this right here in April 11th. I don't really count that because it didn't touch it, but it came close. But you see, if you come here, if you look closer, it's rejected on both sides, right? April 9th of 2025, it bounced from that line. And March 31st of 2025, it bounced up from that line. So because we're at that line right now, it's giving me a level of significance. So if you wanted to get into a Coca-Cola swing trade, if the stock gaps down, I would not get in it at all. If it gaps up, and I would basically use this line as my exit. If we go anything below this, if we gap down, then I wouldn't even get in the trade. But that was just one thing, was that we were at a level of support. But on top of that, I got two forms of MACD. This one down here is the original MACD. But I also like this one for simplicity reasons, right? And the MACD basically gives you direction. If it's red, expect down, green, go up, or whatever. But if you look, this MACD right here looks like we're about to turn green, right? Now we go to the stochastic oscillator, and the stochastic is showing oversold, right? In this blue range down here is ideally where the stochastic oscillator will be. And if it's at the top, it's oversold. If it's at the bottom, it's overbought, and it's below, right? Same with the RSI. The RSI is not oversold, but when you put the Bollinger Bands on the RSI, it's showing oversold. I gotta get my RSI back. All right, so let me add the RSI back on here. I don't need the Bollinger Bands on it right now for this last reason, but the last reason why I like Coca-Cola is because Coca-Cola is showing a divergence, right? And a divergence is when the stock is making higher lows, but the indicator is making lower lows. So what you expect from a divergence, you expect for the stock to break out in the other direction of the divergence. Almost like it's like a fake out, like we going down, but we gonna pop back up, right? So if you look on the stochastic and the RSI, we're making lower lows. The stock is making higher lows. Let me put the MACD back on there to see if that's doing the same thing. And the MACD is doing the same thing. Yeah. So I'm loving Coca-Cola because of the divergence We look like we're at a level of support. You know what I'm saying? So the indicators are making lower lows. Indicators are making lower lows while the stock is making higher lows. I love it. We're oversold according to the Bollinger Band on the RSI. We're oversold on the stochastic. We're at a level of support. Let me get this off the screen. We're at a level of support, and we're also at the bottom of the Bollinger Band, right? And if this is your first time, like looking at trading or charts or anything like that, let me explain the Bollinger Band. So the Bollinger Band, the same thing I had on the indicator down here. The Bollinger Band are these bands that the stock price is basically consolidating with inside, right? This red line going on the top and this green line going on the bottom. There's also a middle line, which is a moving average that goes through the Bollinger Band. But with the Bollinger Band, you see if it ever goes outside, it comes back in. If it ever goes outside, it comes back in. So the middle of the Bollinger Band kind of has gravitational pull on price, right? So if the price is down here and we're at the bottom of the Bollinger Band, yeah, we could gap down, we could go lower, but you could expect for it to go back up, right? But before I get out of here, let me show y'all the divergence example, just so y'all can see what I'm talking about. Um, all right, this is divergence. Let me share the screen. So this is divergence, y'all. You got the stock price. What I just showed y'all was a hidden. I think Coca-Cola has a hidden divergence. Higher lows on the indicator, lower lows on the price, and lower lows on the indicator. So it is hidden divergence, right? So as you can see, when you get to the bottom of the red line down here where it's coming down, you're expecting a pop. And usually with divergences, when they go hard and strong, right? So I like Tesla for next week. I like Tesla for next week, but I like Coca-Cola even better. Make sure you trade in with a stop loss. If Coca-Cola, to be honest, if Coca-Cola gaps down, I probably like it even better. If it gaps up, then that's probably confirmation. If it gaps up and close above this candle, you know what I'm saying? If it close above 71 the next day, then you could probably, if it looked like it's about to close, you know what I'm saying, say Monday afternoon, 3:30 before the stock market is about to close, then you know what I'm saying, you almost have the day figured out, so you could probably just get in at the end of Monday and jump back out on Tuesday. I'm Mike the Money Motivator, man. Make sure you like and subscribe. Do your own due diligence. Check these swing trade plays out for yourself, and make sure you protect your capital.